Ladies and gentlemen, welcome back to the Breaking Bitcoin Market Update with your host, Justin Wise, lead analyst and senior mentor here at KrakenCryptocurrency.com. Hopefully you guys are doing absolutely fantastic today. We've got a great show for you guys today. Of course, today is the day, the slated day. It did happen this morning at the tender hours of, I don't know, I wasn't quite up then. The Ethereum merge was successful. So Ethereum has successfully transitioned from a proof of work blockchain to a proof of stake blockchain. And moments after the merge was successfully completed, the rest of the market remembered, oh yes, we're in a bear market, and accordingly sold off their positions. Not surprisingly, we did see over $1 billion of exchange inflows of Ethereum into exchanges moments after the merge was complete. And right now, rumors are running rampant. There are right now a lot of data showing that about 52% of all validators on the Ethereum network can be associated with 3 entities currently, bringing up a lot of questions about decentralization. I will say this on a personal note. You know, I started off this whole cryptocurrency adventure of mine as a Bitcoin maximalist. I fundamentally believed and still believed when I first got into Bitcoin that the central banking system and the fractional reserve lending system, that the current instantiation of which we do modern global banking and global economics, I thought that it was fundamentally flawed, and I understood and enjoyed the value proposition of Bitcoin creating a deflationary sound money supply. And I still firmly believe in that, and that is the goal that I push forward on a fundamental level with everything that I try to do. However, I will say this. I would commonly say and commonly believe, and I still do, but you have to be willing to adjust your thoughts as you move forward. And if you would have asked me 2 years ago my thoughts on the situation, I would have said, listen, Bitcoin is going to eventually incorporate all features that other blockchains come up with that are considered novel and valuable for decentralization. And that eventually everything will die out and there will be only Bitcoin. That is the fundamental Bitcoin maximalist position. However, I cannot deny that over the last 2 years particularly, all of the innovation is occurring on Ethereum. And there is going to be a very strong, now that Ethereum is proof of stake, they have reduced their energy consumption by 99.5%, 99.9%, depending on the projections. And the global energy usage has just been reduced by 0.2 to 0.5%, depending on whether you listen to Vitalik or whether you listen to some different analysts on the interwebs. And that's significant because, I've done a lot of work in the startup space and working with investment funds, firms, high net worth individuals. And the reality is that the current narrative, one of the bigger narratives right now for professional investors is ESG. This is looking at how not only looking at the profitability of a company, but also looking at the environmental, social, and governance aspect of the company as well. And investors, however we like this or don't like this, are beginning to change their tune and want a more sustainable investment. They don't just want something that is going to do well. They want something that will also, just a second, I need to adjust my camera here. Sorry about this, guys. Filters and okay, I already turned that off. They also want something that is going to make them feel better about what they're investing in. And Ethereum has now potentially a much stronger ESG argument to institutional investors and countries around the world for mass adoption. So we will see moving forward. I still fundamentally believe that proof of work, there's nothing necessarily wrong with proof of work. The energy consumption is fine. You want something that is difficult to replicate. You want something that is difficult to crack, something that is difficult to break. And high energy consumption is one of the fundamental factors in this. In fact, Vitalik has even said this himself with the fact that proof of work limits you to the laws of physics. So you have to operate within that frame. Whereas proof of stake is virtualized so that you can really create any system that you want. There are benefits to this and flaws to this. So either way, there's a lot of opportunity out there and a lot of excitement, and it's going to be fun watching everything unwind, unravel, and grow as we move forward. So I'm curious to hear your thoughts. Do you guys feel that Ethereum has a stronger value proposition now that we've successfully transitioned to proof of stake? And yeah, where do you see the overall dominance going over the next couple of years? Bitcoin dominance has been in a marked decline for several years now, and a lot of that dominance has gone to Ethereum. Ethereum dominance has been in a marked uptrend over the last couple of years. Are we going to see this trend continue? Is this trend going to reverse at some point in time? Is the Ethereum Ponzi on the verge of collapse? I don't think so, but definitely let me know you guys' thoughts in the chat. And if you're watching this afterwards, leave me a comment down below. We'll get into it. Anyways, we got a lot to talk about today. We're going to start off with Bitcoin. As always, guys, we are very proud to host the fastest online growing community of traders and investors in the cryptocurrency space. To stay up to date long after the show is over, make sure to join our free Discord, discord.crackingcryptocurrency.com. The link is down in the description for your viewing pleasure. And of course, make sure to go check out today's, oh, that's not it. Just a second. Make sure to go check out today's market analysis. The Ethereum Merge is here. Time for a sell-off. All right. In today's market analysis posted on the website, I of course go over Bitcoin, higher time frame analysis, and then we move right into our altcoin analysis, our altcoins of interest, looking at massive increases in open interest and looking for opportunities. XNO, Bell, and KNC, Kyber Network. Kyber Network really on a nice tear and actually one of the most constructive charts. We're actually going to go over that here in just a little bit. But of course, we are going to start with the big daddy of them all, Bitcoin USDT. Honestly, nothing too significant here from a technical perspective. We are, of course, trading back below the daily baseline, indicating that we are going to have a little bit of a bearish sentiment, but we have to consider that within the market regime. And we are currently in a crab market regime, a consolidation, accumulation, or redistribution phase. We'll know which one is which after we break. But overall, this is a sideways market where higher time frame trending strategies typically are not that constructive. There was, of course, one decent trend here, two decent trends here. But overall, not too much juice, no big trends. And we can see that simply from the behavior of our moving averages. As we see our moving averages begin to compress together, begin to go flat, begin to essentially go sideways, just as price action is going sideways, that is letting us know that there is not a dominant trend. We're not trending up, we're not trending down, and you should adjust your trading strategy accordingly if you do want to continue to get the same results. Our momentum oscillator Minx is trading back down below zero. Again, very similar to trading back down below the daily baseline. This gives us a general bearish sentiment. Parallax is trading below zero. Again, this gives us a little bit of a bearish sentiment as well. Wadatar Explosion is showcasing a little bit of negative delta here. But one reason we want to avoid taking this as a signal on the daily time frame is the same reason why we want to avoid, if we go down to the 4-hour time frame, you'll see this very clearly. When we see prices been trending upwards and then there's a very swift move down, you can see that our momentum oscillator goes oversold almost immediately. And we have to be aware of that. Oscillators and technical indicators can only work on historical data. And while they do provide fantastic signals and opportunities for making trades, predicting the future, we do have to understand their limitations and idiosyncrasies. So momentum oscillators, when there is a sharp punctuated move to the downside, they will often go oversold or overbought, and that's not really an indication that there is a tradable aspect of the market. The most common way to trade oversold conditions, for example, is to look to be a buyer. And as you can see, there's been no profitable opportunity. We've obviously recovered from oversold, and there was no significant move to the upside that would have made such a thing profitable. Of course, our moving averages are trading down below our daily baseline. We did have our fastest moving averages curling up and crossing over, but so far they have crossed back down. So again, no significant trends, no breakouts that we're looking for here. All eyes are really on our current level of support at 18,694. So we're just going to call that 18,700. And if we apply VPVR and look at the current accumulation range or redistribution range, we can see where we're getting that level. It's the lower shelf of the volume profile. And we can also see it corresponds very nicely with a level that we've had 4 drives down to now. 1, 2, 3, 4. And the thing is, support and resistance are very similar in the fact that the more times you test them, typically the weaker they become. So as Bitcoin's price meanders down here to retest this again, we would be looking for our 5th test. Now, of course, Bitcoin's price can, of course, hold this. And I am overall looking at this trading range a little bit more bullish than bearish. I would like to see movement go up. I've made a 25% allocation to Bitcoin at these current price levels. I have purchased put option protection, so puts. This is the option to sell at a lower price. So I have $20,000 puts. I also have $15,000 puts, and those don't expire until December, giving me a lot of wiggle room if we do end up seeing a November meltdown, very similar to what we saw back in 2018, where Bitcoin's price plunged from 6K to 3K. So all of those things. But I also, so 25, I have a spot position open here. I also have a margin position open up as well, as you guys are well aware of. Other than that, I've taken really no speculative interest in Ethereum. I, of course, do hold spot Ethereum. I've been adding to that. Once kind of the dust settles, I will be becoming a validator with 32 Ethereum. I think that is the way to go. I do have a lot of faith in the growth of the Ethereum network and the future development of the Ethereum network. So I do think that, very similar to my original goal of stacking up 1 Bitcoin, which I've long since accomplished, and stacking up 32 Ethereum, which I was able to accomplish several years ago. I mean, that wasn't too difficult several years ago. Yeah, I think being a validator is kind of a no-brainer. So keep in mind some important things. So I want to go over, let's look at now let's finish our analysis of Bitcoin, and then we'll kind of move into Ethereum. Shout outs to everybody in the chat, by the way. Verk, Alex81SG, B-Flow, Tom Hardy, Damian Hughes, Moonshine Fuel, and Zan. What's going on, my friends? Okay. Let's go down to the 4-hour time frame and see what's going on. So on the 4-hour time frame, we roughly have the same picture on the daily time frame, just with a little bit more granularity. We can see the reversal in trend here, and the shift sharp movement down was brought on by the CPI print, where we did put in a higher than expected CPI print, causing the markets to nuke all over the place. S&P 500 was down, the NASDAQ down, gold was even down, Bitcoin down, literally everything was down coming off of this print. And now we're just kind of slumping and moving down on high volatility. You can see the volatility with all of the wicks, but low momentum. This is one of the most trickiest areas to trade. And honestly, the best decision here is really to not do anything, right? Just the potential are here for upside. We are at a potential accumulation zone on the macro for Bitcoin. Make shorting at these price levels very unattractive. That's why I really prefer to take the option of buying the puts down below. That allows me to spend a fraction of what it would cost to hold open a futures position, for example, and avoids me having to take the risk of really committing to price moving to the downside. I'll be quite honest with you guys, and this is maybe one of my shortcomings as a trader. But I'm typically very much a long bias trader. While I have been able to protect my capital very effectively through the efficient use of shorting, the majority of my profits in cryptocurrency trading has come from the long side, and I think that's probably reasonable for most people. Shorting is just somewhat of a different animal. Okay, let's take a gander here. We did get a short sell signal here coming off of this candle right here, this 4-hour candle applying the PTP strategy. Overall, we don't want to take a full risk position here potentially with our moving averages all the way up, and because this is such a swift punctuated movement. As we can see, there's been not a whole lot of follow through. Again, price closing below the 4-hour baseline here, minks down below zero, ignoring the fact that we're oversold, rising explosion level, negative delta from Wadatar explosion, and parallax down below zero. All of those things occurring simultaneously is our signal to trade with this version of the PTP strategy. And yeah, you would be in profit right now. You'd be up about 2.48%. With no significant signal to close yet, because we haven't gone oversold again, so no overheating symbol. So I'm perfectly fine, honestly, and I have no objections. If individuals do have a meso time frame short position opened up here, I think it's definitely probably not a bad idea, and does give you exposure in the event that Bitcoin moves down. Now, personally, what I would be looking for before entering a momentum short position is I would like to see us lose this level of support at about 18.7, as I talked about earlier. Because again, if we drive down there for a 5th time, we have to get very leery about price holding that support for a 5th time. So best case scenario for the bulls is that we actually reverse prior to that, or that magically and mystically we are actually able to put in a nice bounce of support from there. Overall, looking for trending long trades right now. As long as price is below the daily baseline and our moving averages are flat, we're not going to be expecting any significant moves to the upside until that does happen. So if you guys are following along with me, again, I think there's nothing wrong with that meso time frame short position. I do think that having a long position in this area does make the most sense, and having some options to protect you in case of the plunge is almost necessary at this point in time, due to the fact of another market capitulation being a non-trivial, non-zero possibility. So again, a lot going on, and this is kind of what it means. This is kind of what it looks like to manage and unwind complicated or open up complicated positions with a lot of capital on the line. But the simplest answer for I think a lot of traders out there in this area is likely to do nothing. Make your spot allocation, buy some puts if you want to buy some puts down lower, and then just wait. Wait until we have a breakout of the daily baseline and for our moving averages to begin going back up, signaling that we are going to be having a little bit more of a bullish trend and maybe another rally, potentially all the way up to the 200 period SMA. This is not the SMA, that's the EMA. Let me adjust that. Up to our 200 period SMA, currently sitting up at about $30,000. Not bad, not bad if I do say so myself. So going down to the 30-minute time frame, kind of looking for intraday opportunities right here. Not too much. Bitcoin is grinding the lower band of the VWAP right here. We do have a little bit of hidden bullish divergence coming in right here. So potentially price wants to push back up to today's current session point of control, up at about 20,127. We do have a nice spike down here with a long wick, usually a good time to get long. And actually, to be frank with you guys, I do have an intraday long position that I did pick up on BTC because I did see a lot of long liquidations come in on this candle. Price push back up. I actually took 50% profit right here and just kind of holding on right now to see if price goes back down below my break-even price. I have a soft stop loss right now. I'll close that position out manually if it looks like we're going to start drifting back down to the downside. But yeah, just looking at reasonable targets would be back to today's point of control. But again, we consolidated and distributed there for a long time. So it doesn't seem like a clear like no duh to me. Let's see here. Do we have... Yeah, and in fact, the only naked point of control that we have right now, ladies and gentlemen, is down here right above our level of support. So unfortunately, it does kind of seem like we do have a magnet down here because this point of control has not been retested. And points of control like to be retested because that's where a lot of individuals entered into positions. And we can expect one of two reactions when price reaches those levels. One, anybody who entered into positions here is going to defend their position by buying more, pushing price back up, and making that level act as support. Or they close out at break even, which involves selling, and that actually accelerates the breakdown to the downside and the loss of that key level. So paying very close attention to open interest, for example, as we get down to those levels, can really help you determine whether to buy or sell. Speaking of open interest, let's go over to Coinalyze and just take a gander here. Nah, that's too much. Okay, so let's just zoom out. We're going to stick to the 30-minute time frame right here to see who's really in control of the markets. As we can see, cumulative volume delta has been drifting down as price is drifting down and grinding this level right here. Not a negative, not a very positive sign for the bulls. The sellers are in control. Sell volume is higher than buy volume right now. And open interest is rising. Open interest rising as price is falling can sometimes be an indication of a reversal in trend. However, in this case where sell volume is higher than buy volume, we can actually determine that this is new shorts placing on positions. In addition to that, we can also note that funding has flipped positive. Generally not a fantastic thing because a lot of people are taking bullish bets. However, sellers are still in control of the markets, generally meaning that we're going to grind down until we hit their liquidation levels. And as you can see, although we did have, this is the liquidations that prompted me to enter my position, on this move into the downside, it's not really significant. We don't really have a big flush of longs in this area, indicating that price is likely to continue grinding lower. All right, with that being said, let's take a brief moment and enjoy some humor in our lives. Just one moment. I want to make sure. That, I think that might work. Okay. Okay. Cool. All right. Yeah. Let me know if this is, I'm going to turn that down just a little bit. That seemed a little high. All right, so first off, completely arbitrary humor right here. Did you guys know that babies instinctually avoid grass? So as a father myself, I never noticed my daughter do this, particularly with grass. But it is pretty funny. Yeah, they may know something that we don't. Maybe they just don't like the texture. You know what I'm saying? Oh yeah. Yeah. Has anybody else noticed that? I think, you know, honestly, like while that is funny, I don't think that it really has anything to do with anything. I think that babies just don't want to be like put down, and you know, they're like, yeah, it's that simple. So, all right, on to some Ethereum humor. Obviously, with the merge, Ethereum miners are out of work. Of course, there is the Ethereum Classic they could port over to, and they did launch the controversial Ethereum proof of work fork. It's not going to be highly successful. There's just simply not enough rewards to go around to cover the costs of mining. It's going to very quickly fade out and not be a thing. So if you're speculating on it, take your profits when you can, because it's going down like a shitcoin. But yeah, this gentleman is putting his Ethereum miners to bed the only way he knows how, and this is with the use of with some bagpipes. I feel like this is a very pro. You know, like. Who would, you know, you've had a good run of it, you know, when your miners are like your kids, you know, like this is beautiful. This is okay. All right, so on to some data. So obviously we noticed that immediately following the Ethereum merge, we had almost 10% movement down in Ethereum. So and there's no mystery that everything's revealed on the blockchain. So we had huge inflows to exchanges coming from Nexo. That's 450,000 Ethereum went to Binance. Multi-sig owner, almost 300,000 Ethereum went to Bitfinex. That's $1.2 billion in just 2 transactions, moving funds on chain. And so yeah, just this huge Ethereum exchange flow. Look at this massive spike for Ethereum exchange flow. And of course, as you guys know, when you see large inflows to exchanges, it's typically a warning sign. People don't send cryptos to exchange to buy unless it's a stable coin. If people are sending a volatile risk-on cryptocurrency to an exchange, it's to sell it. So monitoring for large exchange inflows is often a good way to not buy a top. So one thing I always look at when I'm considering a token to purchase, that's not what I'm looking for, oh, come on now. Here we go, exchange flow anomalies. So I use this metric from Santiment to scan the markets for significant exchange inflows. And as we can see here, the number one exchange inflow right now, let's actually just check this. Is Lido Staked Ethereum. So Lido Staked Ethereum is seeing the largest inflows to exchanges that we've seen in quite a while, followed only by Wrapped Bitcoin. So interesting. Just 2 of the most massive tokens on the Ethereum blockchain experiencing large exchange inflows, followed by Chainlink, XCN, BitDAO, Balancer, LivePeer, Scale Network, Constitution DAO, or the people by the people, and Bancor. And notice the price trends of all these assets over the last 7 days is of course to the downside. So seeing large exchange inflows is likely going to accelerate this. Now on a macro scale, we do have to understand that the transition to proof of stake does make Ethereum a deflationary asset, meaning that over time the total supply of Ethereum will be decreasing, not increasing. Prior to this, Ethereum has been a inflationary asset. So that does create, as far as as far as a supply and demand perspective, it does create a strong buy side narrative moving forward. Because in one fell swoop, you have to understand that with a proof of work blockchain, miners are continually selling to cover their costs of operation, and it's a large amount. I think it was like $20 million or $200 million per day. I forget the factor of 10. I apologize, but I was just reading a research study that was going over this. And so there is a lot of sell side pressure. So there's a lot of sell side pressure when you have miners continually selling. And so in one fell swoop, they have essentially reduced a fundamental sell side or a sell side aspect of the Ethereum marketplace, which is they have reduced the daily supply of Ethereum that miners are continually selling to cover costs and take profit. Coupled with the fact that the total supply of Ethereum is now going to be decreasing, not with every single transaction, we do have in the long run a situation where from a pure supply and demand perspective, the price of Ethereum should naturally go up. In fact, some commentator even said that unless there's $200 million of daily sell side, or there have to be $200 million of daily sell side pressure just for price to not go up based on supply and demand. So again, this is the crypto markets. Literally anything can happen. Just because there's a good supply and demand narrative doesn't mean it's going to happen immediately. But again, long term, I think that this is going to fundamentally make a large impact on Ethereum's viability, profitability, and investor or attractiveness to investors. So definitely consider that. Ethereum is my number 2 holding for cryptocurrency. However, I'm not against changing my minds. That might become my number 1 holding because right now, Ethereum has a greater, in my opinion, growth narrative. Bitcoin, of course, has the strongest use case narrative. Bitcoin is sound money, right? Bitcoin is the soundest money. So we will see what the rest of the market decides on. So so supply change since the merge, negative 122.8 for Ethereum. And this is, of course, going to be greater now because this was posted at 2:20 a.m. and literally Ethereum is being burned with every single transaction. And of course, speaking of Ethereum, let's check in on Ethereum itself. What is Ethereum doing? Crashing. Okay, starting off on the daily time frame and looking at price through the lens of pathways to profit. Let's take a gander here. Yeah, so Ethereum, of course, is holding up much better than Bitcoin. Bitcoin obviously driving down here close to its lows, and Ethereum holding up relatively well. Ethereum has, after this rally, moved sideways in a distributive fashion, and it does seem like we are about to lose this shelf potentially, which would likely, if this does happen, mean that we are going to have more downside incoming for Ethereum, because anytime you see a pump and then sideways price action and then we break down, that breakdown usually goes for a while. It's not a stop loss hunt. You know, you have to identify, this held me up for like quite a long time in my trading, because I started studying, liquidity levels in the market for like lower time frame trading and understanding that, well, hey, usually when you see price drive down below a low and there's a big spike of volume and a lot of liquidations, that's usually the bottom. And they were just stopping everybody out who placed their stop losses below support. And once you kind of get that into your head, it can actually be very difficult for you to then properly determine what is, when you see price do that, if price were to come down here and trade below this low right here, is this a breakout or a fake out? And this is, one of those mental masturbation things that can really hold a lot of traders back. In my experience, that kind of fake out, shakeout thing happens on the lower time frames. It does happen on the higher time frames, but more often than not, what the key to identifying is what's happened before. So again, if there's a rally and then sideways price action, that's probably distribution. And then if price breaks down below the low, you should be opening a short position, because it's not a fake out. Sometimes it is, but almost never it's not. Because there was distribution. Everybody who wants to sell has sold, and now everybody. What this sideways price action is people buying up while the earlier investors are distributing all over their faces. And it's generally not pretty. So if Ethereum breaks down, I'll actually probably be opening up a short position and expecting us to drive back down to this level of support. Again, long term, things are looking good for Ethereum, but in the short term, I would expect some downside price action. Nowhere near oversold yet. Of course, all of our on the daily time frame, we actually do have a short signal for Ethereum today, because we are trading below the daily baseline. Interestingly enough, our moving averages are crossing down below our daily baseline, and our momentum oscillators are all below zero, and Wadatar explosion is showing a rising, negative delta with a rising explosion level. So those are all the conditions that we need to be looking for a short position. So definitely something to consider, and potentially consider adding to your current repertoire portfolio of trades. Now, looking down at the 30-minute for where things are right now, again, Ethereum distributed for 3 days, for 3 sessions at this current point of control at 1591.07. So it's going to be very difficult for Ethereum to overcome that 1591 because a lot of individuals have established their positions and entry levels at this price. So if price returns, they'll likely defend it. A break above 1591 for the very same reasons would be nice and a good bullish catalyst, but overall things don't look great. I wouldn't short the bottom, of course. We have had a nice spike down in low liquidations followed by a higher low. Potentially we do maybe grind back up. Zooming out, do we have any levels? So we did actually just tap a previously naked point of control. And we do have another naked point of control down here at 1450. All right, so potentially the next magnet for price is going to be down here at 1450. Let's actually get a horizontal ray and mark that level out. So potentially a nice price magnet for Ethereum down here at 1450. We'll see how price responds. So currently, right now, current resistance sitting up here at about 1580 to 1590. Need to overcome that before we can feel really confident. And of course, you can, of course, buy the overextended, try to swing back up to the upside. But with the perspective of the daily and with, all of this Ethereum that's been hodled and held for a long period of time, finally getting the ability to kind of be moved around. And the reality is actually the Ethereum can't be moved around until 30 days after the merge occurs. So then there's actually that. So maybe 30 days of really no significant activity before we experience another market movement. Okay, again, drilling down into the lower time frames to really see what Ethereum is doing at this scale. Yeah, again, a very kind of negative picture. Look at open interest being flat throughout most of this area of the market. And then as price descends, we start to see open interest rise while cumulative volume delta just goes absolutely down. So the sellers are in complete control of Ethereum right here. Funding spiked extremely negative. Someone shorted massively right here. You can see this with this rise in open interest, and those positions haven't really been closed out yet. We do have some long liquidations coming in right here, and again right here, interestingly enough. And funding did flip a little positive throughout this level as those positions kind of closed out. But overall, this doesn't look very healthy. Again, while cumulative volume delta is declining and open interest is rising and price is falling, that typically means that the short sellers are in control and the price is going to continue to move down. Profit Bear, welcome back, my friend. Thank you for joining us for a live stream, man, and it's good to see you back. Okay. Oh. All right, now that I've finally switched the banner to Ethereum, we're done with Ethereum. Let's switch on altcoins. All right, beep. Okay. We will begin our look for profitable altcoin positions by looking at significant changes in open interest, as we are wont to do. As I posted this morning, Kyber Network has actually taken the lead. All right, Kyber Network has taken the lead. Interestingly enough, that must have been a ton of open interest that fell off of. I don't remember now. XNO. XNO was the lead here. Oh, good enough. Acro. I'm in a long position on Acro, and we're actually pumping a little bit on Acro. So good stuff. All right, sorry. Back to the conversation. Kyber Network has had a 43.13% increase in open interest over the last 24 hours, followed by Bell USDT, Atom USDT, Blaze, and Acro USDT is in 5th place right here. So this is where the opportunities lie on the Bybit Perpetual Exchange. This is where the highest level of liquidity and open interest is coming up. And for that reason, this is where we want to kind of point our eyes and look for possibilities. So with Kyber Network, we're going to look at the daily time frame. Kyber Network is in a nice bullish uptrend right here, as we can see. We can determine that by looking at the angle of our moving averages. All of our fast moving averages are sloping to the upside. Our fastest moving averages are trading above our medium moving averages, and in fact, they're trading above not only the 21, but the 55, and now the 100 exponential moving averages as well, in addition to our daily baseline. Price is trading above our daily baseline. Our momentum oscillators are in the positive territory. And things are overall looking very nice and healthy. We are at the 200 period simple moving average, which often acts as significant resistance for any trending asset. So I would recommend a little bit of caution here and wait to see how this unfolds. Kyber Network has had a very nice trend here, but honestly has probably missed quite a lot of traders down, up almost 70%, a little bit over 70% from peak to trough right here for the entire movement. What would we like to see? Well, if Kyber Network is going to enter into an even stronger trend, we need to see price break above the 200 period simple moving average. That's currently sitting at about $2.11. So a nice daily close, about 5% higher than where we currently are, could potentially be a nice initiation into a nice trending trade right here. Otherwise, buying the pullback is very logical here. You can see the daily pullback to the 21 exponential moving average and then a nice push to the upside, making that a nice 10 to 12% trade right there. Very juicy. So pullbacks right now down to the daily baseline would be acceptable, $1.74. Price can still remain bullish on pullbacks to the daily baseline. Zooming down to the 4-hour time frame, looking for opportunities here. We do see a little bit of a double top formation happening here and actually a slightly lower high. Let's see if we have any divergence. Not seeing any divergence. We are overbought on the 4-hour time frame, so again, generally not the greatest place to be looking for a position. And overall, this area is starting to look a little bit let down on this time frame, like we're seeing a little bit of distribution. We've had a nice sell-off, a secondary pump, likely to see a secondary sell-off here. And then we're going to see if we can actually accumulate here, reaccumulate and push back up, break above that 200 period simple moving average, begin moving to the upside, or if Kyber Network is going to begin its downtrend now that we've had such a nice trend to the upside. The overall macro forces of the market are going to take hold. Let's go down even further. Yeah, so this is pretty constructive. You can see here that we reaccumulated or potentially redistributed. We'll know when we look at cumulative volume delta, and then pushed back up, briefly traded above 2 standard deviations of VWAP, which is usually an exhaustion point for most assets, and coming back down. So the level to watch right now is, of course, going to be $1.98. This is the current session point of control where the most volume has been transacted. We also see a bunch of volume transacted up here. Sideways price action after a pump, distributive, generally not positive. Expecting price to at least pull back down here to the point of control, about a 1.36% move to the downside. And then we'll just have to review and see where we're going right here. Time transformation is not really giving us any guidance. Of course, we are crossing back down below the 0 line, which is typically a short sell initiation. Zooming out, do we have any magnets for price? Not really. No significant naked points of control in the current area or the current range. So yeah, just a nice pullback, pump, secondary pump. Failure to achieve a higher high currently. So we will have to just kind of pause and wait and see. So let's go over and look at a little bit more data before we make our decision here. Here we go. So Kyber Network. Yeah, so Kyber Network does look constructive here. We have to understand this. So here's the 30-minute time frame. And even though open interest has waned and dropped in this area, as of this pump, open interest is on the rise and cumulative volume delta is continuing to climb, indicating that buyers are in control. And greater than this, look at all this funding that has just flipped negative, indicating that a lot of leverage is being used to open up short positions right here. And while this can be a market top, more often than not, when this occurs, when a very negative funding occurs in a market top, and there is rising CVD and rising open interest, more often than not, we're actually going to experience a potential short squeeze. So maybe Kyber Network is going to be pushing for a break above that 200 period simple moving average. So definitely add this one to your watch lists. I did, of course, grab some long exposure to this, and we'll see how it goes. Yeah. Okay. Other than that, I didn't really see any. I did, of course, if you guys refer to my market analysis that's posted on our website this morning, I didn't really see any other significant opportunities. Bell looked like a sell to me. XNO looked like a sell to me, just because there wasn't any significant buying demand. So Kyber Network, definitely the most interesting asset and one to watch as far as our altcoins go. And I do just have to continually point this out that HEX and Dogecoin and now Kronos and the Sandbox have continually been at the top of my strong and oversold screener. So the qualifications for the screener are having an MVRV ratio that places them in significantly oversold conditions while simultaneously having strong on-chain demand or network activity. So I do think that moving forward, if ones are looking for more established assets that are still low cap ish, that Dogecoin and HEX are likely good additions to your swing portfolio, looking for bigger moves to the upside there. All right, that makes it 4:12. We are more than halfway past. We're past the halfway mark of the show. We've got about 18 minutes left in the show, and we will now take this opportunity to answer any questions that you guys may have, as well as take chart requests. So I will let you guys get that in. I'm going to review the chat and take a little sip. All right. Damian Hughes, very correct, sir. Wait until the 10th candle after the drop so the indicators can reset. That is absolutely the correct step. That is a great observation, and thank you for paying attention. All right. Yeah, Pulse Chain Poppy, appreciate you, man. Thanks for the question. Have I charted HEX since I've been back? I have actually done quite a bit of charting on HEX, but for your edification, let's look at the chart of HEX here on Uniswap. And I want to go to the daily time frame, and we're going to apply our pathways to profit. And actually, here's what we're going to do. We're going to remove our indicators so we can mark out our levels. Okay. And guys, if you're wondering what I'm doing here, all I'm doing is a technique taught to me by Sensei Kevlar when I actually first started studying cryptocurrency trading. When you're looking to create support and resistance lines, you want to use a higher time frame chart. And then essentially you're just going to look for a high, and you're going to look left and right and see if there are multiple tests of price on that level. And if there are, it's likely a significant support level and likely worth marking out. And this prevents you from marking out all levels and having so many lines on your chart. And the way these lines are utilized, at least in Sensei Kevlar's strategy, is he's a very different type of trader. You simply, like let's say price is up here, okay, and you've marked out these levels. Well, then this is where you're going to buy. You're going to buy at these levels on the way down with increasing position sizing, okay, until price stops going down. And then on the way back up, you're going to sell those levels. All right, so conversely, if you've done that and price is down here, you'd sell here, 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 here. And that allows you to get a good average of the performance of the asset that you're trading. Okay, so HEX is down about 94% from its all-time high all the way up here at about 51 cents. Currently trading at what? What are we at? About 3 pennies. 3 pennies to buy a HEX right now. We are still above our initial accumulation period, so long-term holders of HEX are still potentially doing okay. Richard Hart is still doing his thing. We've got Pulse Chain coming out hopefully soon. I was actually playing around with the testnet earlier today. So if you guys haven't played around with the Pulse Chain testnet, go check that out. I think you can still sacrifice. You can at least sacrifice with Pulse X and then convert that into Pulse when the mainnet goes live. Okay. So we've got our levels marked out. We do see that we do have another level below us down at about 0.13, which was actually the ceiling of the accumulation level, or the accumulation market regime for HEX, so the original market accumulation regime. So Likely strong support at 0.013. Due to the fact that is going to be the kind of the higher limit of the buy-in area of the long-term HEX accumulators and holders, and likely they will defend their position. Okay, daily time frame. We have had 1, 2, 3 kind of drives down into this low, and it does kind of seem like we are breaking down below it. Our moving averages are, of course, all angling down, indicative of a bearish trend. All of our moving averages are below the slower one, so we're kind of in peak bearish trending mode right here. We are seeing bounces from oversold zones here, and we are entering into oversold territory here right now. We're also having a little bit of a rising momentum here from Water Explosion. Overall, the trading strategy would recommend shorting this asset. We would have entered into a position here and continue to hold this position open as we move down, potentially taking profits as we move into oversold conditions right now. But if the market is going to continue to have a slump here, then HEX is on the verge of losing this level of support, which does make our next stop, or the next area that price is likely to turn around, down here at 0.13. Of course, it is possible that we do end up bouncing again at this 0.0289, which did act as support and is the current market low for this aspect of the market. So yeah, overall, HEX is moving sideways, which is something that I do like. After a significant period of downtrends, price moving sideways is the first sign of accumulation that you'll see. Big breakouts and large movements follow accumulation. But in my experience, there are 2 ways to play these, and this is to dollar cost average in this area. But I think the far more effective thing to do generally is to actually just wait until you see the market do something like this, i.e. begin actually moving up and your moving averages start recovering, and then to buy into the strength of that trend. That way you avoid capital loss. Your capital isn't just sitting there on the sidelines, and it's not just sitting in a trade that might be accumulating for months, if not longer. And yeah, but overall, I do have to say this, right? Like, I did miss out on the initial wave of HEX. Like, I missed this trade. I'm not going to miss out on Pulse Chain. And whether I like it or not, or whether I really understand it or not, again, I think that everything that Richard Hart tends to touch does relatively well. He's got good marketing. And so I think Pulse Chain is going to do really well. It's going to be one of my larger positions for this upcoming bull market. And I'm interested to potentially add HEX. Now, we do have to juxtapose this with what is very positive for HEX, which is the fact that the MVRV score for HEX does place us in significant oversold territory. And I've talked about this metric a lot: daily active addresses, network activity, or transaction volume, and on-chain volume. This is often, using these metrics, and I get this from Santiment, is often a very good way to find when accumulation is occurring in an asset, right? And if we look at HEX, and we're just going to zoom in over the last month, look, prices are low. Okay, so we'll see these same metrics spike when we're having a pump, and that's often the sign of the top as everybody moves their coins to sell them. But look what's occurring right now. We're having large increases of daily active addresses on the HEX chain, big spikes in on-chain transaction volume, meaning large amounts of coins are moving around, and exchange volume has been relatively high. These are generally telltale signs of accumulation. So somebody or somebodies are buying up a lot of HEX and being very active on the network. And when this occurs with prices at lows, this is typically a good buying indication. So while the daily chart of HEX, looking at pure technical analysis, does not look fantastic, we are at very cheap prices, and coupling that with our on-chain analysis does lead us to understand that maybe something is happening here with HEX that we should be paying greater attention to. So what position to take, I leave up to you guys. Let me know your guys' thoughts in the chat or in the comments after this. Pulse Chain thinks it's very dependent on the Pulse launch. I agree as well, man. I do agree as well. And we've got, let's see here. We do have a request from Ron Legato for MSTR. Because he's been using this as a Bitcoin proxy. Monstera. On MEXC, is this the asset that we're Let's see. Alex says, if you look at the volume in USD for HEX, seems like very little money went in it after September 21st compared to earlier. Isn't that a sign that too many people are still in profit? Potentially. Let's look at HEX volume in USD. So look at the volume in USD during the accumulation period. And the volume in USD obviously ramps up as the market moves up. And yeah, here we go. So we do have a spike in volume in USD here. And I would say that while this is not a massive outlier, we are experiencing, the moving average, the volume moving average is declining. Yeah, we are experiencing declining volume. You are correct. At least on this asset, at least on Uniswap, which I do believe is the most liquid market for HEX. As to the MicroStrategy, I'm sorry, dude. As to the, I'm starting to wonder, like, why are you trading this random shitcoin as a proxy for Bitcoin, dude? As to the correlation that very little money went in it after September earlier, isn't that a sign that too many people are still in profit? I do not necessarily want to jump to that conclusion. This would indicate that accumulation is taking place, at least particularly on chain. And since I think the most liquid market for HEX are decentralized exchanges, that makes a lot of sense. And the volume will not start to rise. So this is true of all assets. Volume declines in a bear market. So it doesn't matter what we look at. Ethereum's the same, Bitcoin's the same. Every shitcoin actually has the same volume signature. So this is not relative to HEX. It's just that there's less market participants right now. Volume will not start to rise until we begin moving to the upside, and then everybody piles into things that are already moving. Okay, so MicroStrategy. Let's look at some stonks. Let's get the stonks going. Let's start off on the weekly time frame. This looks like the chart of Bitcoin. Holy shit. Okay, first off, MicroStrategy is currently in a downtrend. We can identify this just visually with lower highs and lower lows. We can also identify this, with the fact that our baseline is angling downwards, as are all our major moving averages, except for our 200 period simple moving average, which is still angled upwards on the weekly time frame. Price is actually broken down below the 200 period simple moving average and is now struggling to try to get back above it. As you can see here, we do have a little rally and reject from the 200 period simple moving average, and we are potentially forming a higher low. We do need to see. Of course, if we do end up breaking this, then we are going to continue the bearish trend. So potential bottom here, overhead rejection, moving averages acting as resistance. This is probably a juicy area for MicroStrategy right here. Yeah, so see, here's that same, look at that. Look at this volume print. Look at that moving average moving down. Volume declines in bear markets because there's less market participants. Yeah, I'm not going to lie. I mean, obviously, as a trend following trader, the movement would be to hold short positions open on MicroStrategy until we see a sharp capitulation bottom. I don't really see any of that. We do have a lot of volume on this downside candle, which ended up being pretty much the bottom. But all eyes are going to be on if we actually start trading back above. If we make a movement here and start trending back up to the other side. That's a 50% movement, but let's go to the daily and see if we can actually capture something right here. Daily time frame here is this is actually not great in my opinion. Daily time frame, again, we can see this movement up to the 200 SMA, the rejection. Our moving averages are trading back down below our baseline. Our baseline is curling back down. And after this movement up in rejection, we actually have this candle right here, which is never good to see when you see a wick to the upside when you're underneath resistance. Jesus, get out of here. When you're underneath resistance and you close a bearish doji like this. Yeah, MicroStrategy just does not look great right now. It's trending to the downside. We had a little bit of a rally, but now we're moving down, rejection from resistance, and likely continuing on our pursuit down. All our moving averages are angled down. All our momentum oscillators are angled down. Yeah, that's very likely. All right, guys. Well, that concludes today's show. Let's head to the DSLR for our outro. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. As always, we really appreciate your guys' support and your continued viewership. If you guys would like to support the channel, you can do so by smashing the like button and subscribing if you have not already. Let's get to our comments of the day. Question of the day, by the way. Leave your comment now. Oh, we'll wait for the question of the day. Hold on. Let me get to reading yesterday's comments live on the air. Loading. Cavano Trade saying, I think that was the best explanation of options I've ever heard. Thank you very much. No. Crypto Bull saying he sees the light at the end too. Just a short moment of darkness for now. Ooh. So a very long comment here from Aaron Webb. I'm going to read the beginning because I think this is a great point. With regards to the PTSD moments from 2018, as I've often said, we had a little PTSD from price crashing from 6 to 3 back in 2018. He said, I started cracking up, but people don't realize how true this can be. These PTSD moments come from actual experience, which made us better traders and analysts. Aaron didn't experience the 2018 dump, but he will never forget the 2020 dump. It's scary to think how many people don't have this experience and think the bottom is our in and are bullish and going all in. I think it's a very good point, man. I think it's a very good point. The negative experiences that we have in our lives do form and shape who we are, and learning from our mistakes, learning from our past is the path forward. So thank you, man. Beautiful comment. I recommend you guys go read the full comment on our YouTube. If you guys would like your comment read live on the air, then leave your comment down below after the show. And the question of the day, what do you think about the Ethereum merge, the transition to proof of stake? Do you think this bodes well for price action moving forward in the long term, in the short term, or do you think this is a definitely sell the news event, as we're seeing everybody basically was talking about, and now we're getting sell the news event. Anyways, we will be back tomorrow. Same crypto network, same crypto station. If you have any questions, comments, concerns, sarcastic remarks, death threats, or hot stock tips, leave them in the comments section down below. And if you would like to improve your trading, consider signing up for the premium trading group, getting access to our online trading academy, our premium indicator suite, and our exclusive signals and market analysis. Until next time, guys, trade safely. Peace out.